Thanks so much for joining us here on the Market Day Report on a Monday. I'm Marlin Bohling with you. Always good to visit about the markets and always good to, well, welcome a new guest. And in this case, a new guest analyst with us. We have Chris Swift with us. Chris, thanks for coming in.
Pleasure.
Want to introduce everybody to Chris Swift. He's with Swift Trading, and you're just literally right down the street in Nashville.
Just a couple of blocks down the road.
So this is very nice to have you close by. Hopefully we can make this a regular event to have you stop by.
Well, I certainly appreciate it.
Just give us just a quick update here on your background. Are you from Nashville?
I am born and raised in Nashville. I've been a commodity broker for the past 28 years. I started with J.C. Bradford and Company back in the early 90s and carried on to Rosenthal Collins Group today, and am a GIB with Swift Trading Company here in Nashville.
Very nice. Well, if you don't mind, I'll pick your brain and get your thoughts on what's going on in the open.
Absolutely.
Let's go take a look together here. Let's go ahead and take a look at our corn market and soybean trade, and we'll run through the grain segment here. We have the corn on December, the new crop month, at 350 3/4. That's down 4 cents right now at 351. Just a couple of ticks off our low of the opening and overnight trade. On the March, we're down 4. Now on the soybean trade, soybeans have opened up a little firmer today, and this is interesting, Chris, because we had soybeans starting out higher last night, and then as we got into the morning hours, they went a little bit weaker, and now we're up 5. 973 3/4 on the November contract. January up 5 at 984. Are you surprised to see that kind of a whipsaw action in the soybean
Well,
trade?
in the soybean market, that is the one crop that is still susceptible to weather. So I can see some fluctuation, a little bit more volatility in that market than what we have seen in the corn and wheat. Wheat clearly already harvested, and we're working off some situations with the drought in Australia. With the wheat market, we still have a very low wheat dollar, and against most of the countries that we export to, that has been of a big benefit to us by having our dollar weaken, keeps the export numbers moving. But in the soybeans, we still have some weather to go through. Always the chance of an early frost that we come in. So no, until we get closer into harvest and get the bean crop made, that volatility should persist.
Now this morning we had a couple overnight export sales reported on the soybeans. We can take a look at what those numbers were. And it was a couple of fairly healthy numbers here, Chris. On the soybeans, 261,000 tons went to China for the current marketing year. And then you add another batch of 126,000 tons to unknown destinations. Usually we know where that goes, but we just can't officially say. But that was a pretty healthy chunk this morning. Is that enough to lift the soybeans a nickel?
It could probably keep them up there. We have noticed that China is consistently always a buyer in our markets. They may fluctuate slightly in the amount of grain that they take from us, but they are consistently one of our buyers of our grain. So China, as we discussed last week, they continue to build the infrastructure to be able to feed their people.
I want to take a look at the wheat trade, and in the wheat markets right now, let's go to Chicago wheat first, and we're down 6 in December. 443 is the last trade. New crop July of next year down 4.5 in Kansas City wheat. Here we have the December contract. If we can roll over to Kansas City, we're down 5.5 at 440.5, and new crop July down 5.5 at 486 3/4. And then the spring wheat trade in Minneapolis has December down 2.5 at 619. On the wheat, Chris, I understand Russia actually increased their exports. I think it was 6.3% over the level they had a year ago at this time. That's not helping either.
No, it's raising cash. Most countries that have big wheat harvests, they see the price continuing down and they need to raise cash, and today is probably the higher price than they'll get tomorrow from the decline that the wheat market has been in. World supplies are heavy, and they're not being consumed at near the rate as what we would like to see them done. But we have lots of supply, so it's not all just the demand side of it being weak. It is we have an abundance of supply of wheat to have to move.
Let's take a peek at our cotton market as well and see what December new crop cotton futures are doing. They are up 61 points at 69.68 cents per pound. We'll come back in just a moment and we'll pick Chris Swift's brain about our livestock trade. Maybe get a quick thought about that cotton market when we come back right after this. Well, we're back with you. I'm with Chris Swift of Swift Trading Incorporated here in Nashville, and he joins us live right now on set. And right before the break here, Chris, we were talking about the cotton market firming up a little bit.
Correct.
Over 60 points higher. I wanted to get your thoughts here on what's happening in the cotton, because it just went completely in the tank once we had the hurricanes come in, and after Hurricane Irma made a left turn and went away from the Carolinas, it's like it's all she wrote in the cotton market. How come?
Well, and it may be the damage. Most of the cotton crop was already made as far as that goes, so any of the damage would have been from heavy winds or flooding, and they just didn't get quite as bad of a rainstorm as what they thought they would get in the flooding. So cotton clearly starts to move back down just a little bit when there's not the threat of the flooding that they would have had. They could have potentially rotted the boils while they were there, or even come in and been able to unharvest it altogether.
All right, let's take a look at our livestock trade. Let's go to the live cattle board. See how we're opening up this morning. You know, we opened up about 40 points higher. Now we have October live cattle 77 cents higher at 108.52 per hundredweight. December up 78 at 113.60, just one tick from our high of the day now. And if you look at the feeder cattle side, we have October now trading $1.47 higher. Look at that, 152.12 per hundredweight there. That's on the high of the morning, Chris. We have November now up $1.48 at 152.20. So again, on the high of the opening range here this morning. Are you surprised?
No, not really. We've had some interesting factors in the cattle market. There is a knockdown, drag-out battle between the packers and the feed yards to trade cattle this week. It's been about 2 weeks since they've had, and the packers seemingly tells everybody they have enough cattle to be able to work through for the rest of the year, and the feed yards are going, well, you know, the hard pull all year long has really made a dent and could show up some marketing holes somewhere in the next couple of weeks of those cattle. So I can see where there is still a pretty pitched battle going on right now as to where they're going to trade cash at, and the demand remains very good for the cattle market and for the beef. A lot of the retailers are coming in and booking their fall needs right now while the box beefs are low and while the price of the cattle are lower. Every time that they book a box beef, it should make that much for greater demand for the fat cattle.
All right. I know we've been keeping tabs on this dairy industry too, and it has fallen like a rock for quite a while, but it did bounce since last week.
It did.
What's going on? What's at play here?
Butter and cheese has improved with the little bit cooler weather. We know that we will improve just a little bit in the butter and cheese market, and that's what has a tendency to drive a lot of the milk markets. And they have been, again, moving up just a little bit on there, but we have not seen any kind of massive cow herd kill that we're going to do anytime soon, or liquidation phase in the dairy. So right now we're still milking a lot of cows, but I believe that we will continue that and the price stay at least above the lows that we've had right now.
It looks like the price is down about 5 cents in value here this morning on the October contract. Not a big change at all. 15.72 is the last quote there. And then I want to wrap up on the lean hogs here with you, Chris. On the lean hog trade, October down 83 at 60.15. December down 66 at 57.82 per hundredweight. So this lean hog trade, how much trouble is it in here?
Well, they have a lot further to go. You're trading a very positive basis right now where the cash market is trading over the futures, and futures continue to suggest we're going to have more and more hogs. Fourth quarter hog production will be the highest that we've ever had, and looks like that'll follow through all the way into the first quarter as well. So the futures end of it are leading the way down, and the cash market is following, dropping anywhere from 50 cents to $1 just about every day trying to catch the futures.
What's your phone number? You took all the time to come in. What's your number? I'll throw that up.
It is toll free, 877-863-2206.
Thanks again.
Look Absolutely.
Forward to it. Do it again.
Thank you very much. Appreciate it, Marlin.
All right, Chris Swift with Swift Trading Incorporated in Nashville. So, Christina, with that, I'll turn it back to you.
863-2206.
There you go.
877.
You're a quick learner.
All right. Thank you so much, Markets Editor Marlin Bohling. We loved having you on set, Mr. Swift, as well.
Much.